So I saw something on the internet that irrationally triggered me, and I have a YouTube channel, so I'm going to talk about it with you guys. And if you've been living under a rug, you probably haven't heard that Michael Burry shorted 80% of his portfolio into Palantir and into a lot of these different names, and it's 100% wrong. And I don't know whether it's wrong in the sake that people are doing it on purpose or whether they're uninformed, we'll say. So let's just talk about what is actually going on so that you guys can, not only for this instance, but you can also realize that people may not know what's going on. They're going to get things wrong. I'm going to get things wrong. That's kind of the innocent version of it. Or they're just trying to scare you, I guess the best way to do it. So this is the tweet. Now I'm picking on stock twits here, but I do some work with stock twits. I like them. So this is no shade on them. I've just seen this everywhere. This is just the one that I retweeted, right? And I said, is there no one out there that understands notional value? So here's the tweet. And you see this over and over again. And Michael Burry, if you don't know, Michael Burry was the guy who predicted 87 of the last 1 crashes in the market. They made a movie about him, The Big Short. He's really a value investor, kind of at his core. And they're saying his entire portfolio, 80% of his assets are short the market, are short Palantir and are short Tesla. That sounds crazy if it was true, and it's not at all in any way, shape, or form. So quick perplexity lookup. It tells you that it's kind of absolutely wrong, but we're going to talk a little bit about why. So this is how options work. It's the first time using this iPad thing, so we'll see if this actually works. So say I buy one put, right? One put gives me access to sell somebody 100 shares of stock, okay? So one put allows me to sell 100 shares of stock. Now, let's just do some examples, some made up numbers to try to make it simple. Now, let's say that 100 shares of stock that I'm allowed to sell is a $10 stock. So it's a $10 stock, and I buy one put option. So I buy one put option. So that allows me to essentially, at a certain price before a certain time, sell 100 shares of the $10 stock, or $1,000. So this $1,000 is the notional value. And this is what everybody is quoting. Essentially, I can sell you this stock for $10 from this one put, 100 shares. So my hope is obviously that it goes down, and it goes down to $8. So I can sell it to you for $10 or 1,000 shares. If it goes to $8, that's $800, and then I get the profit of $200. That's what we're looking for with put options. Or again, the put option goes up in price and I can sell the put option. But again, trying to make things simple here, because it seems like a lot of people that should be in the market for a long time don't really understand what's going on here. So we're going to keep things real simple. Now, so what's happening here, some people can probably already guess. How much did this put actually cost me? Let's say this put cost me $1, right? And let's just, again, we're making things easy. It's still early in the morning here. I got a little triggered. But this put cost me $1. Well, because we always multiply the option price by 100, because we get to control 100 shares of stock, this really cost me $100, the put option, which means if I'm wrong and this stock skyrockets, I lose $100. I don't lose the $1,000. Right? The $1,000 is only the amount of shares that I'm controlling. This is why people often use options, because it's leveraged. So let's look at what actually is happening. So everyone is saying 80% of Citron's value is short Palantir and NVIDIA. Right? So he's short 80%, or like hundreds, $1 billion worth of these. That is the notional value, of course, right? That is the notional value of how much of these shares that he can short, like we just talked about. Now, we don't know exactly what he spent on those, so it's usually anywhere between 1% or 10% of the value of the options. So let's say, for example, he put 20 million in, and he bought these options for $20 million, which means he's risking $20 million. Nowhere near the $1 billion that people are looking at, right? He's not looking at the $1 billion worth. He's risking 20 million. And you can see how that's wildly different from what it is that's going on here. And again, you can do this with a quick perplexity search. Of course, I checked all this, but right, he's not shorting $1.1 billion worth. He's shorting between 20 million and 50 million, which on a percentage basis is wild, right? Then a simple follow-up question is saying, hey, is he net short or is he net long? And he went and he is actually very net long. Maybe I'll refresh this, see if it comes down, because my follow-up happened. So is he considered net short or is he really net long? And yes, he's very long, because he bought $25 million of this healthcare company. He bought 17 million of Lulu. He bought 13 million of SLM and all of this. But he's only paying a little bit for these puts. Then he also bought some calls as well. And all of this is, again, public. So his 98% of his capital is net long equity positions, and only 2% of his capital is short. But yet, this is what a lot of the media is trying to tell you from, again, all of these people, that 80% of his assets are net short, where 98% of his assets are long. So a couple takeaways from this. One, don't trust, it's the world of AI. Don't trust anyone. Don't trust me fully. This is why on my website at StatsEdge, I publish the results of all the back tests, because I'm not just going to go, trust me, Bo, this squiggly line cross this squiggly line, we buy stocks. And also be very careful following these people, because not only is the information being misreported, the information is being misreported and it's late. Generally speaking, roughly, again, 45 days late. So he's 45 days late in what he's reporting. So he could be out of all of these positions by now. Could be completely gone out of all these positions. And he is not doing what the media is trying to tell you that he's doing. So again, just a rant. I saw this morning and just said, what are people doing? We've done this before with notional value versus the amount spent. And they're just, again, trying to scare you, trying to do whatever. But just understand, completely and utterly fake and not at all true. And make sure that everything you read, you're going through and trying to actually fact check the data yourself. You're doing a bit of a smell check, right? A put option expires. Is this guy really going to risk 80% of all of his value? And even if he's right, but early, which is the famous quote from the movie, that I'm not wrong, I'm just early. With this particular bet, he would wipe out everything. All of his money would be gone. So just, again, think about, hey, is this the kind of person who's a value investor who picked the top of the market once? Is he going to risk 80% of his net worth on a bet? Or does he think maybe Palantir and NVIDIA is a good hedge against what's a 98% long portfolio?